Everything has been good. For the past few weeks, life has been going smoothly. In fact, we were taking life on was easy mode and there were no complaints at all. All of a sudden, boom, your fridge got bad. You call a technician to come look at the fridge. The technician reported that the situation of the fridge is terrible and you need to replace the engine immediately. But the price of the engine is very expensive. But you still need the fridge so that your food stays healthy. But unfortunately, you don't have enough money to get it fixed. You better get it fixed or your preserved food gets spoiled. And because you don't know what to do, you feel emotionally down and sad because you lack funds to do something that is urgent. Have you ever had something unexpected happen and realize you just didn't have the money for it? In this video, I will show you why that keeps happening. His name is Mr. D. He is a taxi driver. While he was driving, his car crashed and got damaged, and that taxi car is what he used for making money. The car got so damaged that he took it for repair. Because he used this taxi to make a living, he wants the car repaired urgently. He was emotionally down because he didn't have money to repair his car, but he had no choice. He took it to a repair shop where they told him that he needs $1,000 to get it fixed. Mr. D was sad because he does not have enough money. So he borrowed from the bank. He took a loan from the bank. He loaned $1,000. That the bank forced him to pay an interest rate of as high as $500, which means he lost $1,500 for absolutely no reason because of life problems. On the other hand, here is Mr. Felis. Mr. Felis is also a taxi driver, and that is how he make a living. And that is what he does for a living. While he was driving, his car got crashed. The situation was so bad that he called for a repair. They told him the same thing because it was the same situation, $1,000 for the repair. You would think Mr. Felis will feel sad about it because he does not have enough money to repair it. But guess what? Mr. Felis was not even worried. He just paid for it easily and calmly, like he was expecting it to happen. He fixed the problem, repaired the car, and then move on with his life. Now, what is the difference between Mr. D and Mr. Felis? You might think Mr. Felis is rich, but absolutely not. This has nothing to do with being rich, but has something to do with the mindset. There is something that kept Mr. Felis emotionally stable even after spending that huge amount of money for his car. And I will tell you how Mr. Felis did it shortly. But before I tell you, if you are enjoying what you are hearing so far, I want you to do something for me. Hit the like button, and that is to show that you like this video. It will motivate me to keep doing this type of video so that you can grow financially. So hit the like and subscribe button while you continue watching as I reveal what Mr. Felis is onto. Have you done it? Great, let's continue. So how is Mr. Felis emotionally stable even after paying that huge amount of money to fix his car? This is not about rich, but there is something that Mr. Felis had that Mr. D does not. What is that? Emergency funds. What is an emergency fund? An emergency fund is a cash safety net. It is money you save strictly for unexpected events like the car crashing. For example, you got ill and you need money for treatment, or you lost your job, or you need to pay your bills and it's urgent. An emergency fund is not for shopping or vacation. It's different. This fund is strictly for emergency. And once you know how to create an emergency fund, you will not need to borrow money or pay high interest when trouble hits again. You will have peace of mind like Mr. Felis. You worry less because you know you can survive any financial shock. So, how to build an emergency fund? So many people think by saving you need to save huge amount of money. That's not true. You don't have to save thousands of dollars overnight. Start small, build momentum. I recommend saving an emergency fund for about 3 to 6 months. So, how do you build an emergency fund? First, calculate your monthly expenses. Write down your non-negotiable costs like rent, utilities, basic groceries, transport, insurance, or minimum debt payment. It means something you can't escape from, which means you have to pay it. So, calculate the expenses and do this. If everything gives you $1,000, which means if your monthly expenses give you $1,000, multiply this number by 3 because it is 3 months. If you want to make it 5 months, multiply it by 5. If you want to make it 6 months, multiply it by 6. So if your expenses give you $1,000, multiply this number by 3 to find your starter target. And since your expenses is $1,000, if you multiply it by 3, which is for 3 months, then you get $3,000. This $3,000 will be your savings target for the next 3 months. Remember, you don't have to save thousands of dollars overnight. Just start small and build momentum. Then you get to your target, which is $3,000. Try doing this for the next 3 months. For every portion of your income, save at least 20% every day. Do this for the next 3 months until you hit your target. That way, you will have an emergency fund and you will never have to worry about money for sudden car breaks ever again. And you will never have to worry about money for sudden car breaks or hospital bills ever again. You will not find yourself borrowing money or paying high interest when trouble hits. You will have peace of mind and you worry less because you know you can survive any type of financial shock because you have an emergency fund. If you want to see more of this, hit the subscribe button so that you don't miss our next video. If you don't subscribe, you might never see us again.